Welcome back to Stocklabs for another market recap. We just finished the first full trading week of November on the 11th, and it was a pretty wild one. We're coming in, we were looking for sort of a little bit of a rally in the beginning of the week that faded by the end. By Wednesday, we were fading, pretty well, kind of everything on schedule. And then the CPI print came out on Thursday morning at 7.7 or 7.8% year over year, which for whatever reason, market liked it. So it wasn't 8 anymore. I guess, it's time to price in another Fed pivot, even though that hasn't worked all year. So we had a huge rally on Thursday, and then it continued into Friday, Friday's session too. So ended up being a nice up week for the markets overall for their performances here. We've got the Q's outperformers up almost 9% for the week, which kind of tells you that the market's, looking for, some softening of the Fed narrative or speak or whatever, even though Jerome just delivered kind of the most hawkish message he's given all year only a week ago. But yeah, Qs were most adversely affected by all the rate hikes, so they bounced the hardest. S&P up 5.8%, IWM up only 4.5%, kind of, relatively weak IWM, and the Dow only up 4%. I mean, Dow is always kind of a, little bit less volatile index, but small cap IWM, I mean, you could, if this was really risk on, you would probably see this. You'd want to see this a little higher on such a powerful upswing. Oil down 3%. Treasuries bid up almost 4% for the week. Pretty big week for them. And credit not too bad, up 2% as well. So for the leadership stocks, you could probably imagine with the Qs up almost double-digit percent that these ones were doing pretty well. Meta, finally a bounce came in on this up to 113, plus 24% for the week. This is kind of around where it was trading after hours for a while on the day that it reported earnings. I don't know if that's going to be an important level that people are watching, but that's kind of where it settled by Friday. Nvidia up 15%, Microsoft and Google up 11%, and Netflix up 11%, and Amazon up 11% almost. Apple only up 8%, kind of an underperformer. Tesla down on the week, actually 5%, which I don't know what that was about, but kind of sticks out, when all these other ones are up so much. If we look at breadth was not too bad. I mean, tech led up almost 6%, median. Services up 5%, median. Industrials 5%, same thing. Consumer 4%, financials 3%, healthcare and utilities were the laggards, up only 2% and 2.3%. So, across sectors, you could see the stuff that got beaten the most. I mean, tech bounced the hardest. Subsector wise, we have a lot of sectors up double digits. Okay, we have semiconductors leading, some more semiconductors. Software coming off one of its worst weeks, basically retraced that whole horrible week and made it back in this past week. We got 25, 50, 75, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we got 90 sectors up over 5% on a median basis, which is pretty strong week. I mean, we've had a few weeks this week where this, it was 100 and some sectors up over 5%. So, I mean, 90 is pretty solid, but not as not as assertive as I would have expected. And actually, we do have some sectors that are even down. You can recall other weeks where we'd have a bunch of sectors up and almost nothing down. I mean, this isn't really anything to, really splitting hairs here, but there are some things that were down. Okay, drugs, healthcare. Okay, it looks like some healthcare stuff related to healthcare was a little bit weak in some spaces. I don't know if it was um, news related or what. Maybe just some rotation type stuff. Okay, and we've got breadth by market cap to look at. 1 to 5 billion up 6.56%. 5 to 10 billion up 6.62%. More or less the same thing. 10 to 50 billion up 6.63%. So very uniform on this bounce that we got. 50 to 100 billion up 5.44%. Pretty strong. And 100 billion plus up 5.62%. I feel like I just said that. 100 billion plus up 5.62%. Let me just go back to this one. 50 to 100 billion. Oh, 5.44%. Okay. Yeah, sorry. So yeah, pretty uniform breadth, but pretty strong across the board. I mean, you kind of expect that sort of action. Let's check in on intelligence for the week. Still pretty bare on this screen. I mean, we've got aerospace and defense bullish. We've got energy bullish. That's basically it. These other ones are kind of just random stuff. Okay, bear PayPal ETF. I guess they sell ETFs that are one stock now, but whatever, it's weird. Some kind of bear ETF and an MLP thing or whatever. But basically nothing here on intelligence. Like Stocklabs not really picking out a whole lot of stuff that's bullish here. If we look on the downside, we've got Chinese internet bearish, ARK bearish. So Kathy Wood was tweeting that, basically we're about to start the Roaring 20s over again now. Again, last time everyone was talking about Roaring 20s was right at the end of 2019. We got hit with the COVID collapse. So take it as you will, but hasn't been good for people to be talking about the Roaring 20s so far in the 2020s here. We've got gold miners. I always forget to look this up if this is a bear or bull ETF. So you can look it up. JDST bearish. Another ARK Web ETF bearish. Okay, VIX is also bearish. China bearish. Some kind of cancer. Oh, bearish cancer. I mean, that's always sort of uplifting. Big oil, inverse big oil is bearish, so bullish big oil, bearish robotics and stuff. The rest of these I'm just going to ignore. We'll just stick with like these top 10 or whatever that we did. So yeah, I mean, I don't know. Intelligence isn't really pointing into, a definitive direction here. I think overall, basically the market action this week kind of said that people were more or less, I think, positioned for another catastrophic CPI number. I mean, the CPI number was still bad, because 7.7 inflation with core inflation still kind of like pinned on the highs is not any sort of environment where the Federal Reserve is going to come bail out the market. I mean, they're going to keep their foot on the gas. So we've also got Stocklabs overbought here for the first time since start of October. or middle of September. Same thing, 3 and 6 month. 12-month hasn't hit in a long time. Actually, we haven't had 12-month overbought all year. So let's see, when's the last 12-month overbought? February 2021. And yeah, I mean, market hasn't been great since. Well, it was okay, but kind of end of 2021, we fell off. But anyway, for now, we've got an overbought signal on the market. The overbought signal, let's look at 6 months. We backtest 1 year. We'd be looking for like down 2-3% over the next 2 weeks. So I don't think the rally is really I don't think this is a new like real leg up. I think it's just people got caught out on the CPI print, and then it just extended some on Friday, and that was basically it. I don't think you're going to see like a new bull market starting here. Actually, I'd probably be looking for this to roll over pretty quickly, but we'll see. I mean, maybe the bulls do want to press it a little more on the just riding the CPI momentum, but I really don't think the CPI print changed a whole lot about the outlook for the market or the Fed's outlook or the economic outlook or anything. So I don't see how you could really be up like 10% on what we saw. But maybe people know something, we're pricing something else in entirely. So we'll see. But for this week, yeah, I wouldn't expect too much out of the market. I think at best you'll have some choppy action. At worst, you give back the entire thing since the CPI print. So I mean, you could look out for that as a kind of Hail Mary trade if you want. But yeah, I wouldn't be taking on a lot of risk this week. So we'll see. Hope you guys, enjoying the colder weather. We got Thanksgiving coming up, so take it easy. Don't blow up your account here, towards the end of the year and the holidays, and have to tell your parents or your wives or your in-laws or anything about how bad things are for you. So stay safe out there, and we'll see how this week goes. Talk to you next week. Bye.